This is Let's Talk Energy, your go-to podcast for smart energy insights. I'm your host, Noah Brenner. And each week, we're bringing you an inside look at the dynamics shaping global energy markets through in-depth conversations with Rystad energy experts, as well as some special guests. In today's episode, we unpack the curious case of China stockpiling crude oil. This year, China has been consistently buying more crude than it needs to supply its downstream sector, and socking away the additional into storage, sometimes as much as 1 million barrels per day. This is an unexpected source of global demand. It's helped keep crude prices buoyant, despite the decisions by OPEC Plus to add additional oil to the market by more rapidly unwinding their voluntary cuts, and as well, despite the growth of non-OPEC supply sources such as Brazil and Guyana. So just how much oil is China putting into storage? And what has been the impact of this additional buying on oil prices and supply-demand balances? What are some of the reasons that Chinese refiners are stocking up? And what can that tell us about how long they might continue to add to their already substantial inventories? I'm joined from Singapore by Lin Ye, an expert on China's oil market and a vice president in our analysis division, to help shed some light on the most important driver in the oil market today. Lin, welcome to the program.
Thanks for having me.
Let's talk energy. So, if you can set the scene for us here a little bit, just how much oil is China putting into storage to date, and when did this begin? When did we notice that this was happening?
From March to June, China has put 140 million barrels of crude oil into storage, which is a huge number, I think. But I didn't realize until that everybody was talking about it during the APEC week in Singapore earlier this month.
As you say, this has become come to the forefront of oil market discussions. But is this stockpiling, is it continuing today? Is China continuing to buy these additional volumes?
The stockpiling kind of slowed down from July, also into August. And we think September probably will see a stock draw. According to our estimate, actually, in the later months of this year, we think China will continue to build stocks and also into next year.
All right, so I want to come back a little bit to our estimates and how we see this playing out in the months ahead. But before we dive deeper, let's put this in a broader context. There is, in terms of the underlying fundamentals, how do we think that this has impacted global supply-demand balances and I guess therefore prices? What's the broader impact of that trend?
We know China is the biggest oil importer in the world. So, anything happening in China attracts a lot of attention, of course. And this year is a little bit special in terms of OPEC Plus going back to regaining more market share kind of strategy. So from May onwards, I think OPEC Plus has embarked on this path to bring more barrels back into the market. And then I think China has played a role that absorbed a lot of the surplus on the market, which kind of supported oil prices globally.
So if we hadn't seen this additional buying, perhaps we might have seen a more dramatic price response following these OPEC Plus decisions that have come over the month. But Lin, I know our numbers, as well as those of other organizations that are forecasting future oil markets, see quite a bit of oversupply, in fact, growing oversupply in the coming months. Is this surplus buying by China enough to offset those numbers?
According to our unsolved balances, in 2026, we are expecting about 2 million barrels per day of surplus. So supply is really outspeeding demand growth. That means China stockpiling may contribute to the absorption of the surplus, of course, but far from enough to absorb all the barrels from the market.
So China stockpiling can help the market, but it's certainly not a solution for the type of oversupply that we and others believe is going to be happening now and into the future. And I think that's a really important point. just because, I mean, certainly we've seen this buoyancy in prices, and that buoyancy has been surprising. But I mean, that was at a time when the surpluses were not necessarily what we expect to see in the coming months.
Supply correction is needed. Inside of the looming surplus. So either OPEC Plus needs to cut production again, or sanctions will eventually work on Russia, Iran, or US shale will need to slow down further.
Some supply lever would be needed to balance this market, whether that's declining US production, less oil from some of these countries facing sanctions, Russia, Iran, or yet another OPEC plus move to restrict supply this time rather than add it back.
Kind of gave the confidence to OPEC plus to think that the market is in decent demand this year.
I think you wrote a really interesting analysis of this. It was maybe a couple of weeks ago, and there was a line in there that struck me, and it was, it's important to note that China's crude inventory changes are a critical buffer for the global oil market, but not a permanent solution. And so how might the oil market and prices look if China doesn't continue these purchases into the future?
In terms of how big the market size is for China, any stock build or draw matters to the global oil market. And this year, I think it was kind of a surprise to the market because the market has already known that China has slowed down in terms of the oil demand growth because of course, energy transition. And that's why I think even OPEC Plus didn't expect that China's crude imports is still such strong in this year. And then people start to realize, China has built a lot of oil storage during the past years. And then the question would be, how long will this last? Will China continue to build more stocks in the upcoming months or years? And I think the answer is yes, because I think the capacity is still growing and a lot of projects is upcoming in the next few years.
Let's come back to that future outlook a little further on in the discussion. But I wonder, do we have any numbers? I mean, the most basic question, as you point out, is how much storage does China have, and how much has been built, as well as maybe what percentage of the storage has been used up to this point with the stockpiling that we've seen to date. So, can you shed some light on those areas?
There is no accurate number in terms of how large the capacity is, because in China, this sector is particularly non-transparent. We have some estimations around that number, actually. We compared a lot of data sources, and we think currently the capacity on the ground is about 2 billion barrels. And this number is expected to grow to 2.2 billion barrels by end of 2026, which I know is a huge number, right?
It's a huge number. Do we have any idea of how much oil might be in storage now, or I guess how much of that 2 billion barrels might be left to fill up?
Based on our balances, I mean, we kind of calculated based on supply, imports, and consumption, refinery runs, etc. And that balance told us the current fuel rate is about 58%, which means there is still a lot of spare capacity. So there's the need to fill into the new tanks. That's driving the imports from China.
So certainly storage capacity is not going to be the limiting factor in terms of whether Chinese refiners continue to build these stocks. But I mean, that leads me to the question of who actually is it that's buying and storing this oil? I mean, we've been talking about China kind of as one entity or kind of a monolithic China. But are these state companies like a Sinopec, or are these some of the private players that have grown, particularly over the past, say, 5 years?
China is a bit complicated because the importers in China are usually categorized into state companies and independent companies because they have been behaving very differently in terms of crude buying and refinery runs and margins are very different. So this year, actually, both of these two sectors are buying strongly. So, but they are driven by different reasons. But they kind of stockpiled a lot at the same time.
So we're seeing both public sector and private sector companies adding to their oil reserves. But I mean, I guess this also leads me to the question, maybe a similar question, but asked a different way: is are these strategic reserves, or what we would consider strategic reserves, or commercial stocks as well?
When we say SPR in China, it's really run by the government.
Okay.
And there are also commercial stocks run by the state companies. But these part are usually also categorized as SPR because these state companies also managed by the government. And the rest for the independent players are really, commercial. And the stockpiling this year, again, happened for all of these sectors at the same time.
So across both what would be considered strategic reserve builds as well as perhaps commercial stock builds. Now, I guess what might China do with this crude oil? Could it re-export it as crude? Would we see additional product exports? Would it just be kept for a rainy day as a buffer strategically, or perhaps if prices were to rise in the future? What's the end use, do you think, if we can figure that out?
I don't think China will re-export these crude oil because the demand is very solid and very sizable. So I think it's really a buffer. And of course, China doesn't usually hedge on the crude side. It's usually saving for its own use.
I mean, I guess that really kind of got at what I was looking for was just how, what the end use of this could be. But I mean, I guess that also leads me to ask, sort of on the other side, if China's buying, then someone is selling. And so, what about the countries selling oil to China? Have we seen any changes in the source of China's oil imports maybe over this period?
The oil producers, suppliers, they are happy that there is China in the world, right? Will support their crude supply. And in terms of the origins of China's imports, actually, I think in March, specifically, China imported a lot from Russia and Iran. And I believe that was driven by the fear of tougher sanctions later this year. And in April and May, I believe, more of the additional imports were from the Middle East because these 2 months are usually the heavy maintenance season for China's refineries. And during this time, usually the Middle Eastern countries will lower their OSPs, which is the official selling prices of their crude oil, because it's in low demand in China. They want to play this game. And usually when China's demand is rising or hiking, then they will increase OSPs. So now China can also play this game with the OPEC plus producers, right? China can stockpile these crude oil when it's cheaper and can consume when their demand is higher. So that's what we saw this year. And it was driven by different reasons and different sectors.
Okay, so I just want to be clear, because I think this is really the question that people want to know is why this was happening and some of the factors. And so it sounds like, from what you've said, there is maybe a geopolitical element of this in terms of hedging against future sanctions, and a price element. Did I hear that correctly? And are there any other things that you might think might have come into play here?
There were multiple reasons behind geopolitics, of course, which means fears of sanctions in the future, because we all know that even though we already have those sanctions, but it was kind of still a bit mild, and it could go tougher in the future, as the talks of sanctions are still ongoing, right? And it was also out of the fear of tariff war, of course, because U.S. can also, go tougher on tariffs, and then China will be worrying about its ethane and propane. Then crude oil could be a alternative route to produce these petrochemicals. So that makes crude oil very important. And also economics matters as well. So when crude oil prices are cheaper, of course, it's reasonable for China to buy more to save for the future, because the demand will always be there. And also it was about fundamentals. So China will also play this game, because refinery runs is very seasonal. Like the maintenance usually were planned earlier, that cannot be easily changed, but they can change the stock build or stock draw.
I want to talk about the fundamentals and the economics, because I mean this is coming at a time when oil markets are in backwardation, which means that the price of oil today is higher than the futures price, so the price in a few months. So why would China choose to buy in the period that it did? I mean, why not wait? Why wouldn't refiners wait and say, okay, we think it looks like prices will go down in the future and we can get an even better deal?
The backwardation today was also a result of the strategy from the OPEC Plus, because they usually will announce more barrels back in future months, and then the prompt price will always be supported by geopolitical risks in some way. So backwardation kind of sustains for longer. However, OPEC Plus also uh, assessed the market on a monthly basis. So we all noticed that OPEC Plus will hold this meeting every month and announce their plan for the next step. That means they can also be flexible and go back to production cuts anytime. That's why I think China was also concerned about the future prices might be higher because of the change of strategy from OPEC Plus, and also sanctions will change quickly, because it depends on the negotiations and ceasefire talks, etc., etc.
Okay, so while the forward strip might be showing a certain price, China and Chinese refiners perhaps had concerns that forward strip wasn't necessarily reflecting all of the risks, be they geopolitical, OPEC plus decision making, and so perhaps hedging those bets. And when the price is good, why not take advantage today rather than bank on something that might happen in the future. And so I did want to talk a little bit more about OPEC Plus. I mean, they surprised oil markets by adding about 2.2 million barrels per day, unwinding 2.2 million barrels per day of voluntary cuts more rapidly. Um, do you think China's stockpiling might have factored into those decisions in some way?
We don't know what OPEC Plus is thinking about, but I think they kind of assessed the demand on a monthly basis. So when they saw, okay, what we exported to the world can be easily absorbed, then they have the confidence, and they will roll over their unwind plan to the next month. So month by month, then we are here today now.
Let's look ahead a little bit. I mean, I've read some reports that say China plans to continue that buying well into next year. You mentioned earlier in the conversation that we as well see the potential for that. I think the figure I saw was something like another 140 million barrels per day, perhaps more or less. Continuing through March. I mean, do you think that that's a possibility? Is something like that realistic as we look out into the future? And then I'm going to ask you about our own assumptions here in just a sec. But I mean, how realistic do you think a scenario like that could be?
Well, that piece of news, I think, could not be easily confirmed, as it was. I don't think it could be reported by the government directly. So, so as long
Sure.
as it cannot be confirmed, then everybody knows about it, and I really believe probably OPEC Plus has already considered that, and they want to test whether it will be true. So they keep on bringing more barrels back. But let's think about this question from the root reasons of the stockpiling, because we cannot know what government thinks about SPR increase, right? But we can think whether the previous reasons for stockpiling will continue into the future. I mean, the geopolitics, fundamentals, and economics. If those reasons, if those standards can be met, then the stockpiling will continue. And we really think we have those reasons still exist. So we think the stockpiling will continue into next year.
Unfortunately, geopolitics are remaining a hot button issue throughout the globe, and the economics are there, given where oil prices are at, certainly today, and where we think they could be. But in terms of where we think, I mean, what assumptions are we making about China's potential buying habits, that stockpiling, and whether that continues into the future? Is that factoring into, say, our outlook on the remainder of this year and then into next year as well?
We think the stockpiling in the later months of this year will slow down, as it already slowed down in recent months. And in the remaining months, I think the main reason is because of the less quota left for the independent sector. Because we know that the independent refineries still need quota to access the imported crude. And as the current utilization of the crude imports quota is already 80% above. So I think the remaining quota will not allow them to import more than their need.
Some of our listeners may not be familiar with that import quota. And so, Lin, could you just explain a little bit more what you say when you say quota?
Okay.
And then as well, I guess, is there any chance that quota could be increased, or they could get additional volumes? But let's start. What is that quota?
Yeah, I think quota may sound a little bit far away from the Western world, but it still exists in China. As I believe it was a legacy from the previous planning market, and but currently I think it's still kind of management tool for the government to really regulate this independent sector, as they don't put any quota to the state-owned companies. They can buy freely. But for this independent sector, they usually use this quota to really limit their refinery runs.
This means that these independent refiners are only able to buy a certain amount of crude, only able to import a certain amount of crude, say on a yearly basis or a quarterly basis. And you're saying that quota has been about 80% used up, and there's only about 20% left. And so that could be a limiting factor for these independents, although it may not limit the state players. Am I understanding that correctly?
For the independent sector, usually what they do is they need to apply for quota, which is usually the nameplate capacity of their refinery runs. And then now it's allocated on a yearly basis. So they will get their quota from the start of the year, and they can control their pace in terms of crude imports. But by end of the year, usually they will have less left, which kind of limit their refinery runs.
Interesting. And I want to take a step back even further, I guess, a little bit from this. I mean, China's oil demand, as we talked about at the beginning of the program, remains the biggest driver of global oil prices, and probably will for years to come. And so if we set aside this buying for storage, I mean, how do we think about China's future oil demand, the underlying demand? I mean, we hear a lot about EVs, electric or CNG trucking. What are the factors, I guess, that you're watching as you think about what does that trajectory of China's oil demand look like, whether it's kind of near term, but also a little bit further out into the future?
This year, 2025, is the peaking oil demand year for China. So,
Okay.
yeah, but specifically for gasoline and diesel, These two products has already peaked previously, and now they're on the falling trajectory already. But then the demand will be offset by the rise of jet fuel and petrochemicals. But from next year onwards, the loss of gasoline and diesel will be bigger than the gain from the other products. That means the overall oil demand will start to fall. However, actually, China has this reliance on imports of petrochemical feedstocks. We know that China imported a lot of ethane, propane from the US, the Middle East, etc., to be feedstock for the petrochemical sector. That means China can play around between the imports of petrochemical feedstocks and from its domestic production from the refineries, which can also produce the feedstocks for petrochemicals. So we think now the refinery runs has entered this plateau period. So it's flattening and probably will not easily go back to the previous high in 2023.
So while we may not see necessarily the same demand for those liquid fuels that go into the transportation sector, oil demand still potentially could be boosted by, as you pointed out, petrochemicals, jet fuel, and then there's a broader ability to kind of toggle between the imports of these different commodities. Am I understanding that right?
Yes, you're right.
Excellent. Well, Lin, I think that's a perfect place to wrap up our conversation. Thank you so much for joining us today on the program.
I hope I have another chance to go back to here and probably do another episode if anything interesting happened.
Well, I'm not worried about. I'm sure there's going to be lots of interesting things happening when it comes to China and the oil market. So I look forward to having you back very, very soon.
Thank you. I really enjoyed it today.
Let's recap. China has added millions of barrels of oil to its storage this year alone, which has helped markets absorb additional supply and supported benchmark prices. The purchases were made both by state refiners as well as private companies, with a range of motivations, including hedging against future US sanctions and also simply taking advantage of lower market prices. We believe this trend is likely to continue into 2026 in an opportunistic manner as Chinese refiners take advantage of relatively cheap prices and the country's growing oil storage capacity. However, oil storage buying alone will not be enough to balance the market. And so we believe supply adjustments, whether due to sanctions, due to declining US shale activity, or changes in OPEC Plus policy, may be needed to balance the market. Thanks for listening to Let's Talk Energy. This podcast is a production of Rystad Energy, produced by Laura Rodriguez-Skaug and Bada Oak. Check out the show notes for further analysis on the topics that we've discussed today, and connect with us on social media. We're at Rystad Energy on all your major platforms. While you're there, hit that like button, leave us a review, and don't forget to subscribe. You can also keep up to date on our website. If you'd like to send us questions, or maybe you have some comments about the episode, go ahead and reach out directly. It's podcast@rystadenergy.com. And most importantly, don't forget to join us next week for more Let's Talk Energy.